Welcome back to ISFA. Today is lecture 3, and we're going to be delving into the general ledger and financial reporting system. Now, at the end of this lecture, you will be able to do the following. You'll be able to explain key features of the general ledger and financial reporting system. You'll be able to list the differences between a manual and a computerized accounting system. You'll be able to identify the benefits of digitizing the accounting process, as well as analyze key risks in the general ledger and financial reporting system, as well as internal control procedures that will address these risks. Let's look at the key features of the general ledger and financial reporting system. This diagram characterizes the general ledger system as a hub connected to the other systems of the firm through information flows. The transaction cycle processes individual events that are recorded in special journals or subsidiary ledgers. Now, in a computerized system, the similar types of transactions are processed in subsystems or modules. So in Sage 300 ERP, what you have would be things like the sales order system, and that's that and this. You've got your AR system, which comprises cash receipts as well as billings. And then you have your purchase system, which is cost accounting. And you've got your AP system, which is AP plus cash payments. Part of the expenditure cycle also includes payroll, which we're not actually testing you on. And these are all examples of subsystems or modules that will eventually summarized and get fed into what we call the general ledger system. So they flow, the summaries of these transactions actually flow into the GLS. And what happens after that is that they become sources of input for the management reporting system as well as your financial reporting system. So the financial reporting system performs the financial reporting function, which is mandatory. So that basically churns out reports like your balance sheet and your profit and loss statements, while the MRS provides management with internal financial information that's needed for planning and controlling business activities. Now, do take note that for most of the businesses, the GLS and FRS systems are integrated as one system. So what you have learned in Sage 300 ERP, and if you look at the GL module that we have in there, you will notice that it's an integrated financial reporting system with the general ledger. So for the purposes of this lecture, we will combine the GLS and FRS as one integrated system in our discussions. If you recall from lecture 1 that a transaction processing system typically has 4 elements. So as with any transaction processing system, your GLS also has 4 key elements, and they are your input, your processing, storage, as well as output. And what we'll be doing is discussing each of these 4 elements in the next few slides. Inputs into the GLS can come from 3 main sources. Firstly, the transactions processed in the other subsystems or modules, such as AR, AP, and payroll, will pass entries into the GLS. If you recalled earlier that the GLS is the hub that was connected to other subsystems. So that's how entries get interfaced. Secondly, the GLS will also internally generate its own entries. Now, some examples of this would be what you would have seen in your Sage 300 ERP in terms of recurring entries, reversal entries, and closing entries. And the third source of input would be manual entries entered into the GLS, which is usually supported by a journal voucher that's been approved by a responsible manager. Now, these are generally for less frequent transactions, such as the buying of a fixed asset, and as well as for balance day adjustments. The source of input to the GLS is the journal voucher. So an example of this document looks something like this and can also be found in your textbook. Now, a journal voucher can be used to represent summaries of similar transactions, such as to record credit sales where you will debit your debtors and you'll credit your sales,
or a single unique transaction, such as to write off bad debts. Now, essentially, it identifies the financial amount and GL account code of each debit and credit entry. Now, take note that the journal voucher must be approved by a responsible manager so as to offer a degree of control against any unauthorized GL entries. The GLS databases include a variety of files. While these may vary from business to business, the following examples are representative. Each of these are either a master file, transaction file, archive file, or a reference file. Let's go through this list and let's see what they're each used for. The GL master file is a master file. It's your principal file in the GLS database, and it's based on the chart of accounts. The general ledger history file is an archive file, which is in the same format as the GL master, and it basically takes on all the historical data from the master file and is stored up here. Your journal voucher file is a transaction file which records all GL transactions that are entered into the GLS via journal vouchers. So in this instance, it's your manual entries. And the history file basically contains all the past years and past periods journal vouchers, which are actually for audit trail purposes. The responsibility center file is a master file. It houses all the responsibility centers and it basically groups financial data by these centers. And the budget master file houses all the budget data. And your chart of accounts file is a reference file that actually stores all the different chart of accounts. The accounting process and the steps in financial reporting should be familiar to you as you have learned the process in Financial Accounting 1. To recap, there are 11 steps in the accounting process. Take note, however, that each of these steps is done in different systems. Take, for example, the capturing of a credit sales transaction is done in the transaction processing system in the revenue cycle, as are the recording into the sales journal and the posting to the AR subsidiary ledger. From the posting to the GL to the preparation of the post-closing trial balance, this is either done in the GLS or the FRS system. For most organizations, the GLS update procedures are usually done on a batch basis. Hence, in terms of the frequency of each of the steps, except for the first two steps, which are usually done daily, the other steps are done periodically, that is, at the end of day, end of week, or end of month, depending on the volume of transactions. Preparations of the financial statements are done monthly, while journalizing and posting closing entries are only done at the accounting year end. The FRS is the final step in the entire financial accounting process that begins in the transaction cycles. The key outputs from the GLS and FRS include the following categories. The chart of accounts report, which is a coded listing of accounts kept for reference by the accounts department. The GL control report, which essentially maintain the audit trail of the transactions processed. The examples given here are from the Sage GL system. The batch list report and the posting journal report are similar to the journal voucher listing report mentioned in the textbook, while the GL transactions report is similar to that of the change report in the textbook. The financial statements are the most important output from the FRS, comprising the balance sheet and income statement. Note that the financial statements can be printed in hard copy or sent to users in soft copy. Now, with the government's push for efficiency in providing the financial statements to ACRA, more companies are looking at providing their financial statements in a common XBRL format for submission to ACRA. Now, XBRL stands for Extensible Business Reporting Language and is a computer language that's used for standardizing methods of preparing, publishing, and exchanging financial information. The management reports here refer to reports generated by the FRS and do not represent all the management reports required by the organization. In fact, most of the management reports come from the management reporting system, which essentially draws information from the GLS and FRS and other subsystems from the TPS. Did you get the preceding question correct? The three main sources of inputs into the GLS are interfaced entries, internally generated entries, and manual entries. Now let's look at the differences between manual and computerized accounting. We saw earlier the 11 steps in the GLS and FRS. In a manual GLS and FRS system, all of these steps are done manually. Now, in a computerized GLS and FRS system, as you can see, apart from the capture of transactions in the TPS and the GLS, all of the steps are automatically performed at the click of a button. Let's move on to identify the benefits of digitizing the accounting process. The automation of the accounting process enables the preparation of the financial statements to be completed in a much shorter time and as and when required. IT controls built within the system enable better controls to be implemented in the GLS and FRS, hence reducing human errors in the financial reporting preparation process. Over the long term, less staff are required, and ultimately this leads to cost reductions in the GLS and FRS reporting process. The integration of the GLS and FRS with other TPS subsystems allows seamless information and data flow to the GLS and FRS. This also reduces human errors arising from inputs from other subsystems that flow into the GLS and FRS. Let's now review the key risks in the GLS and FRS and the important internal control procedures to be put in place to address these risks. The following are primary risks associated with the GLS and FRS. They are 1. Defective audit trails, 2. Unauthorized access to the general ledger, 3. GL accounts that are out of balance with the subsidiary accounts, and the last one is inaccurate GL account balances because of unauthorized or incorrect journal vouchers. Now, the above risks, if not managed, may result in misstated financial statements which have far-reaching impacts, such as misleading users of financial information and, in the end, financial loss for the firm. The first risk is having a defective audit trail in the GLS and FRS. Now, the audit trail is a record of the transactions through the input, processing, and output phases of transaction processing. A defective audit trail will not be able to facilitate error prevention and correction. The main physical control to mitigate this risk is to have proper accounting records. Properly kept documents, journals, and ledgers will ensure that a transaction can be accurately traced from initiation to final disposition. The GL and other files can be used to reconstruct data if financial records are completely or partially destroyed, and to provide historical data required by auditors. The GLS contains confidential information data of the organization. Unauthorized access to GL accounts can result in errors, fraud, and misrepresentations in financial statements. The key physical control to mitigate this risk is to have access controls, so that access to accounting books is limited to authorized personnel only. IT controls may be in the use of password control, where robust and complex passwords help prevent unauthorized access. Multi-level security, where different users are given different access privileges. And output controls, where reports reach the intended users. When GL accounts are out of balance with the subsidiary accounts, it signals an error either in the TPS or the GLS FRS systems. The physical control to mitigate this risk is to implement independent verification. A common way is to have periodic reconciliation of the two accounts by a personnel not handling entry to the GL or subsidiary accounts. IT controls would be in the form of automated direct postings to the GL. That is, automated posting from the AR or AP subsystems to the GL system. This will help reduce human errors in posting to the GL systems and hence prevent any imbalance in the accounts. Incorrect balances due to unauthorized or incorrect journal vouchers represent the greatest risk to misstatement of financial results in the FRS. Physical controls to mitigate the risk include transaction authorization, where the journal voucher must be authorized by a responsible manager before it is entered and posted, and the segregation of duties, where the task of updating the GL must be kept separate from all authorization and asset custody responsibilities. The common IT controls would be to institute input controls such as edit checks, where this ensures that all data that are keyed in are valid. Process controls could be in the form of batch balancing checks, where an error message is displayed when the debit entries do not balance with the credit entries. Automated direct postings from the TPS to the GLS is also good IT control to prevent incorrect entries from happening. Congratulations on completing Lecture 5. You have learned about the key features of the GLS and FRS system, the differences between manual and computerized GLS and FRSs, and the benefits of digitizing the accounting process. The other important concept learned is the key risks in the GLS and FRS systems and the relevant physical and IT controls necessary to address these risks. This slide summarizes the physical and IT controls for these risks. Now you're ready to work on your tutorials and quiz. All the best!